Good morning, ladies and gentlemen, and welcome to day 4 of the Fintech stage. I hope everyone is doing great. We are starting off this morning's session with a workshop on the world of central bank digital currency. And I would like to introduce our first speaker of the day, Mr. VIKRAM Pandya, Fintech Director of Jain School of Global Management. Welcome, VIKRAM.
Thank you, and good morning, everyone. Very quickly, we will look at the agenda for the day. We are going to learn about the world of central bank digital currency, how the global regulators are looking at CBDC, and what are the avenues and opportunities that you can look at when it comes to the growth, new business model opportunities. And based on that, we will have a discussion also around this. A reminder, please ask more questions. It has to be as interactive as possible so that more questions you ask, more knowledge you get. Let's start with first and foremost part, which is the basic definition. What is CBDC and how CBDC can really help, right? Now, people already know that, yes, it is a digital currency issued by central bank. But beyond that, what exactly it can do? Let's understand from the perspective of regulator. First of all, let's wear regulator's hat and try to understand why somebody would like to create central bank digital currency in the first place. So when we look at the idea behind CBDC is to have replacement for the currency that central bank normally issues or prints. Unlike bank money that you have in your bank account, which is also digital in a way, this sits on the balance sheet of regulator. Central bank will recognize this as a liability, similar to what they do when they print the banknote. And this, because it is akin to currency or cash, will not carry interest rate. In most of the countries, you will find that it will not have interest rate at all. So far, there is only one country that I know about which has with interest rate, interest-bearing CBDC. But that is very small country. So given that it is very small country, it doesn't matter much. But countries where you have robust banking system, they will never ever create CBDC that to retail with interest-bearing feature. Why? Because the moment you do that, automatically it reduces importance of banking system, given that now you can get currency which is interest bearing in a way from regulator, indirectly you can say government, and because of that it reduces the counterparty risk completely. And because of that, again, when we look at interest bearing feature will not be found in majority of the countries which is there. One more question becomes, what is the difference between wholesale CBDC and retail CBDC? Wholesale CBDCs are meant for trade finance, exports, etc. and bulk transfers, right, between corporates, institutions. And normally it will leverage RTGS systems of the country. So you have real-time gross settlement systems, and that is what it will leverage. The idea there is to have more efficiency. The idea is there to have more people coming into the ecosystem and making sure that the entire cost of transaction inefficiencies go away, right? That is the first and foremost basic understanding on the wholesale CBDC. On the other hand, when you look at retail CBDC, that is meant for daily use, people like you and me who can then use it. The circulation will be much faster. That is what the core assumption is. Velocity of money goes up because of that. At the same point in time, there is another one thing which happens. The issue here is that because this directly comes from central bank, while the velocity of money may go up, the other multiplier, money multiplier as we call it, right? Because central bank, when you put money into your bank, because of the reserve requirement, you have fractional reserve system as we call it. And that fractional reserve system allows you to multiply your growth in the money multiplier method, right? So you start with, let's say, $100. As a fractional reserve system, you are supposed to keep, let's say, $20, and then you can lend out remaining 80. And that same thing again comes back to your banking system. And that out of 80, again 20% you need to keep aside. So $16 you keep it, $64 you lend it out, and that continues. And when that happens, you have a multiplier effect because that initial $100 is resulting into maybe a 4x or 5x multiplier. In this scenario, however, it does not result into any multiplier. So at the same point in time, if you are issuing excessive and you are trying to replace bank deposit because of that, again it will create an issue. So central bank normally will need to look at this as cash. If you do anything else, there is a trouble because there is no reserve requirement for CBDC as such. And the moment that happens, it goes out of the banking system, the issue starts there. Coming back to the point that we have at the bottom, you have now 112 countries, in fact, not 109 anymore. This was like a couple of months back in May 2022. Now you have September data as well. And there are 112 countries which are working on CBDC. And this is the snapshot of where they stand, right? So you have around 9% of them launching, so approximately 9 to 10. And then you have multiple different countries which are in pilot. There are people who look at some of these things very differently. So let's look at a global scenario, right? I would like you to open that first site. Yeah, so this is the snapshot of where all different countries are. You can see the breakup, and those which are marked in green are undergoing the pilot. We already know that they are doing that, China, etc. And then you have under development, including India and others. US also is now going under development. And when we look at by 2023 and 24, within a year or two, you will find majority of those which are under development will enter into pilot and real world use cases. Now, what does that mean for people like you and me? Initially, we'll see that majority of the countries in the world will start with wholesale CBDC first. Not the retail, but wholesale. Why? Because it is much more simpler to identify that, okay, if they require volume, not overall, let's say, value rise, right? Because CBDC, which is wholesale, can test the value. But what about volume? The moment you test out value, then the volume becomes the next challenge. And under retail CBDC, you will find that you need to scale up rapidly. So when you start with wholesale, you can at least test out the idea that you wanted to start with. And then when you move on to retail, at that point in time, the more diverse ecosystem can be tested, scalability can be tested. And because you require differential classes within the CBDC, at that point in time, it can become more complex. Now, why you may ask about why do you require different classes of CBDC in the first place? First reason, there will be CBDCs which will allow you to only spend on certain end use cases, which we call as a direct benefit transfer. Now, when the direct benefit transfer happens, you want to also limit the end use. You don't want somebody who is given vaccination money as a direct benefit transfer to be spent on something which is completely unrelated. Similar to that, you don't want somebody who is given money for ration and that getting spent on something completely different. So the idea there will be, you will have multiple CBDC classes. Some classes will not have any underlying restrictions on the spend, but DBT, direct benefit transfers, will have underlying limitations on where you can spend, right? Second thing is that whenever we look at, again, velocity, right? When we spoke about velocity, you want to ensure that CBDC is not hoarded. So there are some countries, in fact, which are creating rules that it will have a negative interest rate indirectly, that if you don't use it, if you try to hoard it, it reduces in the value. Now, these are unique ideas to be tested. We'll see how it moves. But when we look at some of the new age criterias in the world of economics, as we'll go ahead, you will understand how different building blocks come together in making CBDC efficient and useful. So this is where we go. First, go back to the PPT. So if you look at the survey which was conducted, like this is a diverse survey which I wanted you to understand. You have all the different countries, then you have Germany where you have, of course, GDPR, then you have Indonesia, Nigeria, and then US where you have again stricter data protection laws, right? Privacy and data protection law, wherever you already have, in these countries, you can see I would not consider using a CBDC, percentage very high. But of course it is not majority, but very high percentage. Why? Because you have a trilemma in CBDC implementation. And what is that trilemma? It means that the moment you want to have traceability, then acceptability goes down. The moment you want to track the usage, where it is being spent, etc., usability, of course, goes down because people will not accept it. People are worried about their privacy. So in the countries where they uphold the privacy and look at data security very tightly, at those places you will clearly find that people will have more hesitation in accepting CBDC as their day-to-day currency. When we come to the other countries where the data protection laws are not that much, you can clearly see that Indonesia and Nigeria, even some of the other developing countries, they are okay. They don't bother that much, right? So that becomes interesting for regulator to look at what is that they want to focus more on, right? So when we spoke about this trilemma, regulator would like to look at the inherent behavior of the citizen in that country and try to create or focus on 2 out of 3 features that CBDC should have. And these features typically will revolve around how well you can use the metadata within the CBDC. Now, what are these metadata that you need to track? Number one, rather than looking at individual specific or PII specific data, you can look at the industry specific data, or you can understand how quickly the money is moving, some of the other data point, and try to still identify real-time policy making that you can do based on those metadata points. Let's assume COVID-19. When COVID-19 hit the entire world, regulator had difficult time in identifying which all segments you need to put more focus on. Sometimes you create a policy which may backfire on the later date because you were creating policy in the hindsight. You never knew about what is the reality on the ground. And suddenly you realize, okay, this worked, this will not work, and that wastage which you are having, policy wastage, along with misfire that you can have in the policy resulting into inflation and other thing, that is secondary part. Of course, right now the inflation is supply side, not the demand side that much. But at the same point in time, you can have those negative impacts if the policy is not properly curated and created. At the same point in time, you can have regulator which can have embedded compliance in the currency itself. Now this is interesting because embedded compliance, what that exactly means is that rather than focusing on the user to comply with the regulation, you are saying that currency itself will comply based on wherever you want to send it. Let's say if in a country you don't have capital account convertibility, it will stop. You have certain grey list countries where you can't send money. So again, currency will comply with that. It will not allow you to send it. If you notice, SWIFT is creating its own CBDC bridge. Very soon you may find that they are even creating a live pilot where people can test it out. You already have some other CBDC bridges which we'll see. And those bridges are trying to become interoperable across the globe. And the moment that happens, moment you have proper working CBDC bridge, and all the countries believe in that, let's say SWIFT's bridge, the moment you look at that, this opportunity that we are talking about, going global, becomes much more easier. In wholesale CBDC, as I mentioned, the benefit that you have is a simple idea that you can transfer money globally with much robust cost architecture and infrastructure is lucrative for all the regulator. Along with that, of course, bank's margin will go down, but at the same point in time, look at the overall trade efficiency. You have currently the trade finance market, which can boom almost 5 to 10x the moment you have all these inefficiencies taken care of, right? So you have more economic advantage rather than just looking at that shrinkage in margin for the banks. Next, we have design element, right? So these are the questions that a regulator should ask or answer when they are trying to look at what exactly should be the part and parcel of CBDC. Why? First question is why. Now, if this question is just a PR value, then believe me, it is a disaster, right? Because there are many regulators who may look at other countries and say that, okay, I also want to create or I want to try it out. That is good, but you need to have objectives defined, right? So that is what the next thing. What? It refers to type and model of CBDC. If you have clarity on what you want to achieve, then you look at what exactly you need to do in order to achieve that, right? What kind of CBDC model you need to apply, and we will look into that more in detail later. Next, you have when. Now, it answers couple of things, right? When means what year, time, etc. That is fine. But at the same point in time, you want to look at when and where together. Next one, where and how, right? So when and where, when you look at together, that creates very compelling argument, because let's assume tier 1 cities first, where you already have technology and people are ready to accept that technology, right? That is where you want to start first. Then you may want to have offline model in tier 2 and 3 cities, where you have people and let's say even the intermediaries that you require to distribute certain things should be ready enough. And that basic infrastructure you want to create first before you want to start issuing CBDC for the retail in tier 2, 3 cities. Not possible, not effective enough if you do that. Next, you have where and how. So this is what we discussed. How is the infrastructure part, how will you distribute it? And finally, it is who. Now, who will be the participants, right? Whether you require banks, will you require some other intermediaries like payment service provider, PSPs? Will you require players who are working as distribution agent, or they are trying to create intermediary system within the banking ecosystem? So these are the questions that you want to answer. And then the design element, you have account based or token based. Now here the question becomes, do you want to create an ecosystem where you have account directly with the regulator, and that account only will have that currency, CBDC, and you can use only that account to transfer? Or a token based, where you can have even third parties creating wallet or allowing others to create a wallet, and they can allow you to store CBDC under that. Typically, token driven CBDCs allow for more features, and they are more compatible with your traditional cryptocurrencies as well, right? When I say compatible, you can have APIs much more easily created for that connection, because both of them are completely on public permissioned blockchain network, right? In account based, normally if you use blockchain, it will be private permission blockchain. So if those who are not aware about these terms, you need to ask two questions, right? The first question is, can anyone join? Now this is the first question you need to answer. Can anyone join? If the answer to that question, can anyone join, is yes, then it becomes public. Then the second question you need to ask is that, can everyone do everything? If the answer to that question is again yes, that becomes permissionless. If the answer is no, then it becomes private in the first case and permissioned in the next case, right? So when you have private permission blockchain, it means that only by invitation you can join. Typically it is a consortium based ecosystem. So private and permission means that only selected people can do certain things, not everyone can do everything. So with this, let's understand the next one, which is wholesale, retail or general purpose. This we have discussed in general, but specifically if you look at, right, most of the global projects are on wholesale. Even if you look at Singapore started with both project in mind, saying that we will start with wholesale as well as retail. But after evolution, they realized that retail CBDC will not bring much value in Singapore, so they are not going to issue retail CBDC at all, but wholesale CBDC under Project UBIN, they have already started. They have tested, there were 5 phases in Project UBIN, and under those 5 phases, they were able to achieve whatever they started with as an objective. Next, you have direct, indirect, or hybrid issuance model. Now, what is this? We will cover in the next slide. Centralized, decentralized operation. Majority of the government will start with centralized. Nobody would like to start with decentralized at all. But you can have some governments which are smaller in nature may want to create decentralized ecosystem. What are the advantages in centralized versus decentralized? In decentralized, you may have more say from the public. And that is where you can see that, okay, the decentralized ecosystem may have more acceptability, but that is not yet tested out. When we look at the structure which we were talking about, first one is indirect, second is direct, and third one is hybrid. Now it might be slightly difficult to read, but let me summarize it for you. The first one, which is indirect model, which means that you can go with intermediaries only. You have in between intermediaries, central bank, intermediaries, and then finally the consumer. Whether it is wholesale or retail doesn't matter. In between you have intermediaries, so that becomes indirect. Then you have direct CBDC, so you are directly dealing with central bank. And the third one is hybrid, which means that you can keep account with even central bank, or you can even keep account or token with intermediaries. In some of the developing countries, you will find the third model. In developed nations, you may find directly central bank. Why? Because in developing nations, you really require strong distribution network. Central bank can't reach in every small part of the country. Not possible. You require distribution model which is robust enough. And from what I understand and what logically also makes sense is that all these larger countries will have this distribution through the hybrid model. You will even have specialized agencies. Like today you have payment gateways, payment aggregators, etc. You will have specialized agencies which will also then allow to distribute this on behalf of regulator. When we look at the future of this model, you will find that by 23-24, next year, right, you will look at majority of the countries starting with a specialized license in distribution. That is what I believe, where the existing player can also do, but new opportunities will come for a new segment, new class of businesses which can then distribute this product. And by doing so, you can allow more innovation to happen. To give you some examples, let's say central banks will build on retail CBDC or wholesale CBDC, will build some embedded compliance. Now, embedded compliance, once you build, you can also extend that compliance based on whatever ecosystem you want to deploy that. Let's take an example of indirect taxes collection that you do, right? Indirect taxes, like GST and some of the other taxes. When it comes to GST, typically in most of the countries, the moment you raise the invoice, by next month you are supposed to pay to the government, not when you really receive the amount from the counterparty. Now, what happens in this case is that small and medium enterprises lose on the working capital because they need to make the payment to government very next month, but at the same point in time, government will not give any benefit if the payment comes after 90 days. That is not the possibility at all. So after 90 days when you receive the payment, that 2 months gap that you have typically is your loss of working capital. And when you really require this to become more efficient, what you can directly do is that you can embed the compliance where you can allow user to pay directly the indirect taxes when the payment is received from the counterparty. Because you have digital invoices, the payment can be linked to the invoice. You already know that this is what the outstanding credit is there, so you can avail the credit if applicable, and the net payment will be received by you. You don't need to do anything. You don't need to file forms. You don't need to do any specific compliances. It is embedded compliance within the CBDC only. Next, what you have is some of these numbers when we look at, right? 105 countries representing over 95% are exploring CBDC, and that is a good thing to look at. The moment we look at 95% of the countries are looking at CBDC positively, I personally look at out of this 105, 80 odd countries will go live at least in wholesale. And when we look at retail, maybe 40, 50 will go live with retail. And why more wholesale than retail? As I mentioned, many countries which are small in size, etc., where you have privacy as a concern, you don't have any usability out of retail CBDC. You can't track and trace, so what can you do? Even currency today, if you have proper currency which you are able to print and circulate, that is doing the same job for you. It is just about managing that printing and other expenses that you are currently having for the printed currency. If you are a small country, those expenses are not that material. Currency printing, management, expenditure, operational expenditure are not that material enough. But the moment you look at larger countries, that expenditure compounds very quickly. And that is when you have more benefit. That's why India is looking at retail CBDC, not Singapore, correct? So this is what you will find. Next, this is the case study that I want to discuss about Project Ubin. Now, this is the completely operational architecture. This is how typical wholesale CBDC may look. And why I'm showing you this Project Ubin, because this was in association with BIS and multiple different countries were involved in that. Even multiple different financial institutions were involved. So this becomes a blueprint for people to look at when it comes to the operational architecture, right? So when we look at this gate over here, tokenization and de-tokenization, so this clearly tells you that it is a token-based CBDC, not account-based directly. Second, you have some of the embedded features, right? You have delivery versus payment, escrow, conditional payment, outright payment, payment commitment, like you are committing that you will make the payment, so it is blocking of the account and amount. So all those features that you want to add will come through a smart contract on top of your CBDC. This is what I meant when I said embedded compliance. Embedded compliance or embedded features that you want to add will come through that layer on the smart contract side. And then you have some of these use cases, right? This entire bridge that you have can have multiple different issuers, different CBDCs involved in that. And on the other side, you have wallets. So as I mentioned, you have tokenized, so you will have wallets. If the account based is that, you will have account. So in India, the current discussion paper that they have put, they are saying that they will have account based for wholesale, token based for retail. It is yet to be seen. In UAE also, they have planned for, as a vision that, okay, CBDC will come. And when you look at globally, even US is working on CBDC. They have published concept paper on that, and they will create their own CBDC starting again next year. So far, any questions, anyone, before we move on to the next one? It is a technical architecture, so if you have any questions in the foundation, feel free to ask. Okay. Now let's look at the technical architecture. You have the process flow on the top. You have issuance, transfer, redemption, conditional payment, and all those features that we spoke about. And then you have reconciliation. Now typically what happens, if you create blockchain based, then the last step is already taken care of. As you know, blockchain will not require any reconciliation because it is a shared truth. Everyone will have common ledger, so you don't require reconciliation. But if you use non-blockchain based, there are many countries which are going with non-blockchain based, then you will require the reconciliation part. But start with issuance first. So issuance, you require complete management, right? So there are multiple solutions which are available, and you can play that video. So we will look at one implementation which was done in Thailand and Ghana, I think. Let's look at that. So G+D, this is the company which is there. There is no sound as such. You can just look at how they are looking at CBDC implementation in the retail side. This is the retail CBDC use case. So similar to the normal credit card, you have a card which has CBDC balance. So it is similar to prepaid card. And you can have offline payment also without any internet or network, because it is a prepaid card, and you can have NFC based transfer or you can have Bluetooth based transfer. So this supports that offline use case. Okay. Stop and go back to that other website which we are talking about. The second website. Yeah. So if you look at the solution that they have proposed or created, right, there are multiple such providers. We will look at some of them. So what they have proposed is that first you simulate. And this is where the digital twin comes into picture, which normally people know about. So here the digital twin of existing payment system and network is created. It allows you to simulate how the payment flow works in the current system versus how it may grow in the next one. Then you have configuration. This is where you determine risk and adoption across multiple centers that you have. You identify hubs in the first place, hub-spoke model that you have. You look at how you are going to implement your entire model. And then you identify that, okay, third, you will look at build communication. This is the most critical part which normally is missed out, right? Even if you are the regulator, you need to communicate for the better adoption or acceptability of your CBDC. If you don't do that, you may create a product, but you will not get the desired result or output when it comes to the final result. Finally, you have adopt, which means that you will start with the model adoption, whatever you have created in the first three steps. Go back to presentation. So this is the technical architecture which I wanted to highlight. Under issuance, transfer, redemption, this is taken care by CBDC platforms completely. And the process here, whether you use blockchain based or non-blockchain based, is that you require regulator to control these functions. Only regulator can do this, right? So when you look at, in general, this will be public permissioned network. Public permissioned network. It is meant for public, anyone can join that way, but certain functions are reserved only for certain people, like regulator. So public permission network, if it is a blockchain based, if it is non-blockchain based, that you know already how it can work. Many countries which are starting with non-blockchain based, they look at several different solutions like immutable database. You have immutable database from companies like Amazon, AWS, called QLDB, quantum ledger database, right? So those features are used, and that allows you to create a system when you are looking at non-blockchain system, but you are using some of the elements of blockchain like immutability as a part of your core feature. Coming to this entire gateway, now here payment channel. Now this can be anything. This can be your RTGS, it can be your NEFT, it can be your WhatsApp, anything, any payment channel that you may have, right, on this side. From the payment channel, then you have core banking system and funding account. This is what you can link directly. This is a, let's say, token based project Ubin. So here you can even have a system which can directly link to the wallet. You can see on the extreme right hand side, you have APIs, UI and UX. Now this allows application to integrate with whatever core architecture that you have created. So your application will get integrated with this. Now this is a blockchain address which you have, and multi-currency blockchain based payment network. This is the main core architecture of how you can have a interoperable CBDC from the design perspective. You have a smart contract talking to gateway. Now this gateway typically allows you to understand what other CBDCs are, what type of it is created, and then you integrate with that. You have ledger, interoperability services. So these three things are connected, as you can see. And then you have a exposed endpoint, again, UI, UX API. So this entire architecture is tested, time tested, and this is working at least for the wholesale CBDC, which we have seen. Now these are some of the use cases. One, you can see, I will summarize it for you. You have capital market where you have OTC based. Now under capital market, OTC based means what? You have over-the-counter instruments created, fractionalized over-the-counter investment that you want to trade, all those things you can do. Even from the delivery versus payment, as we call it, right? D versus P. That also is part and parcel of this. When you look at cross-border settlement, these are some of the live projects, by the way. And when you look at cross-border settlement, this allows you for the dividend payment settlement using CBDC across different countries. Then you have trade finance and supply chain. Interestingly, this is where you have two different use cases. One is the discounting part, actual trade finance part, let's say LCBG discounting that you have, plus on the other hand, you have documentation part. The blockchain helps you with that documentation, and along with that, it helps you identify that, okay, this is what you can achieve from the, let's say Marco Polo. Let's take example of Marco Polo. This is a network where verification and automatic matching of trade data is done, and along with that, you have complete integration with the CBDC system, so the entire thing can go without any issue. This is some of the other use cases where you have insurance and media advertisement, salary payment. Some of these use cases are much simpler to understand, so I'm not discussing in detail, but you can understand the growth that may happen because of this. Now let's look at some of the other notable projects. This is where I wanted to highlight that all these international projects, right? Whether it is CBDC Bridge, everywhere you will find BIS is a partner. Some of this you may know about, most of them will be new to you. So let's look at one by one. First and foremost, you have multiple CBDC Bridge or M-Bridge as we call it. And in September 2021, it was started with BIS, Hong Kong, Thailand, China, UAE. And this is where the idea was to make sure that you are able to create a framework which can support multiple CBDCs on one bridge. This was the first such project which tried to unify different blockchain architecture and frameworks. And you can see clearly that use case was wholesale, right? And you will find everywhere the use case is wholesale. So the idea is that you start with simple and then go to complex. You don't start with complex like retail CBDC first and then go to wholesale. So here you have different architectures used. Second is Project Dunbar. This is where Australia, Singapore, Malaysia and South Africa again collaborated with BIS, and this is the platform which was used specifically in the current year itself for international settlement across multiple CBDC. Again, same thing, here also it was multiple CBDC, same multiple CBDC, but if you look at the outcome, what they've realized is that in some of the cases, the architecture was not proper. So they had to redesign the architecture. In Project Dunbar, they had to look at the architecture two different ways, right? To figure out that, okay, whether it works out or not. For different currencies, for different architecture, you need to create and then test, verify. And this is what you identified only when you try to implement this as a pilot. Otherwise, it is very difficult for people to figure out. Last one project that you can see here is around creating 6 distributed digital asset platform, right? 6 is a exchange in a way, and this is where you have another testing model for wholesale CBDC, and here majority of the time you realize that the settlement etc. was taken into account, how it can work, and Switzerland and BIS were working together. All the multiple countries you can see working together to figure out what can work, what will work in the future, what will not work. But at the same point in time, you look at some of the other, right? Again, wholesale CBDC. Here, on the first one, you have Project Eber, Jura, and then Onyx. All these three CBDCs, same outcome that they wanted to test. You may believe why they wanted to do this differently, right? Why can't they can come together and do this? First of all, they had different objectives in mind. The objective that they had is that, okay, maybe delivery versus payment, somebody had that. Somebody just wanted to do cross-border remittances. Somebody wanted to have fractionalized investment. Somebody wanted to identify how you can create a robust ecosystem of multiple different currencies working together. So all those different use cases resulted in different project. And I can tell you that this one, the center one, you had the similar to wrapped Ethereum. Normally people have that wrapped Ethereum, right? Similar to that, you had WCBDC. It is a CBDC which can be then integrated in the crypto ecosystem, right? This second one. Now this is again interesting because the moment you have something like this, it can allow you to completely integrate with the current crypto ecosystem and allow for the fiat to crypto bridge much easily. So this is another use case where France and Switzerland came together and did this project. Switzerland has that crypto valley, as you know, and this was mainly to look at that use case. Finally, this is implemented CBDC across the world, very interesting to look at. Now this allows you to understand what are the features that people have implemented when it is live, right? So China, it is not interest bearing in most of the countries apart from Marshall Island. Because it is very small, they can even do and try it out, but nobody else will go for interest bearing CBDC as we spoke about. Then you have limits on holding and transactions. Now what does that mean? It simply means that there are certain inherent limitations in CBDC embedded within CBDC. You cannot hold more than X amount. And you can't do transactions, let's say, worth more than X amount. These are the limitations that some of the countries are putting. You can see that you have a couple of countries putting those limitations, but others are not having that. Offline usability, most of them will support in future. The idea is that you start with online and then move to offline. Always, that is the safer way to find it out. And last one is international access. Again, majority of the country will eventually go for that. When you look at technology, most of them are on DLT, distributed ledger technologies, and there are certain companies which power almost all these different things, right? There is a company called bit.com, which has powered Nigeria's currency, for example. All these different modules that they create are for those issuance, transfer, reconciliation, all those things. So with this, any questions, anyone, before we look at some of the other use cases? Yeah.
Yeah, so I wanted to ask, like the video you showed, so is that card, the money is inside the card, or is it like stored in some central server and then it syncs up?
So it is kind of a prepaid card. So it is stored as a part of the card.
Today prepaid card also work in
I know, but I'm saying it is a prepaid card where it is stored on the chip itself, on the card, which you can then use. Because the use case was offline plus online both, right? So here the idea was that if you don't have internet connection, etc., it will go into offline mode, and through the chip it can read, and then it can use that.
And if you lose the card, you lose the money like cash.
No, not really, because you can lock that indirectly, right? So what can happen is that, let's say somebody is trying to use that, if it is offline, right, at the end of the day. So you require that authentication first. So unless until your authentication is gone, it is not usable. And second thing is that even if you lose and you lock it, which means that that settlement will not be accepted later. Let's assume somebody is able to even get your password, correct? Now the money is with them on their wallet, correct? On the device. Card. So let's assume before they have spent, you are able to report, then the next spend may not happen.
Okay.
That is what they mean. So that is the security, but if they spend it before that, you can't track. Unless until it is a traceable cryptocurrency or traceable CBDC in this case. And they are not having traceable.
Okay. And you also said one more term, delivery versus payment. So can you just explain that, because I have heard multiple versions of this definition. So that.
Okay, so what version you know about? Let me first understand that.
So delivery versus payment, if you ask me my understanding, it is like when there is a simultaneous exchange of goods and the money is happening. So that is what I understand.
So it is true, and there are a couple of more versions, for example. So you have the moment, the settlement, basically it is the concept related to settlement, right? So here, the moment you have delivery, the payment immediately happens at that point in time, not otherwise, because you have counterparty risk that you want to eliminate, right? So here, that settlement agent is not required in a way. That is the core use case. Because you have at the same point in time, you mentioned that, right? Simultaneous. So you don't require that intermediary which normally removes that risk.
Okay. So if say suppose I am shopping at a retail store and I am making a payment at the POS and taking
This
the
is
goods.
for securities. Delivery versus payment, which I mentioned.
But is it only for securities or it's also?
The one which I mentioned was for security.
Okay.
Delivery versus payment.
Okay.
But what you may want to apply it to the general sense, but what I was talking about was mainly on
Just the security.
security side, because it was on the SIX platform,
Ah,
Switzerland Swiss platform.
okay.
Any other question, anyone? Feel free to ask more questions. More questions you ask, more I can share. Okay, can you go to the Excel file? So at the end, whoever is interested, once you share your email ID, you will get the entire detail of all the live CBDC under development, under pilot. This is the entire database of all the CBDCs summarized for you. What I will discuss, however, is some of the statistics and some of the highlights rather than going through all the 112 CBDCs. So first and foremost, I want you to see that there are multiple CBDCs where countries are coming together, right? So let's look at this 4 and 5. You have Israel in both the places. They are working with multiple different countries. One is standalone. And when you look at currency name and status, right? You have research and then proof of concept, and it is meant for retail, right? It is going on from last few years. The result of that is that they realized that retail is very, very difficult to start with. So they have worked with Hong Kong for some of the wholesale related issues first, right? You need to first look at simple and then go to complex. Similar to that, if you go down further, you will identify that some of the other countries like Brazil. Now, this is where it is still a proof of concept, but emerging economies like Brazil are looking at retail closely. Go down further. Yeah, Bangladesh at a research stage, but they are also looking at both. I want you to see Singapore again, right? So they have cancelled the retail one. Orchid, they have cancelled that retail one. And you will find all the reasoning behind it, what platform they are using, which technology they are using, and what different use cases that they were able to test out. So this is that entire summary. And if you look at Sweden, for example, it is right now under POC. And if you look at some of the use cases in Sweden, they want to start with retail. That is interesting because they want to try it out, how it works. Crypto Valley, etc. in Switzerland, Sweden also want to understand how it can work out. While it is not a big country, it is interesting to see that they also want to look at retail, and they already have started with POC. So you will find certain exceptions, but majority, if you look at generalization, majority of the countries which are big countries are looking at wholesale first and retail later on. Any other questions, anyone? Any questions that you may have, feel free to ask, because then it allows me to ask more. Yeah.
In terms of digital currencies, still the fractional reserve system will apply, or is going to be a fixed quantity, distributed ledger? How is it going to work in the real life situation?
Yeah, so for currency, as you know, right, for currency there is no fractional reserve system applicable. When I say currency, means actual paper currency, correct? For the fractional reserve system, when you talk about, are you talking about the banking fractional reserve system, or are you talking about something else?
Okay, let me explain the point I'm making. So today, if central bank wants to print more currencies, they are at liberty to do so because not linked to gold or anything, right?
That remains true here.
So now, okay, so digital currency can be printed to the infinitum.
Whatever, again, look, as I mentioned, it is akin to cash, correct? The idea here is that you are not trying to replace bank money. The moment you do that, then there is a trouble. The moment you try to replace your bank money, then there is a trouble.
Why is that?
Because as I mentioned, that bank money is subject to fractional reserve system. When I say fractional reserve system, that is where you look at, let's say, you have in India, you have CRR, SLR, which you need to keep, right? And then only you can lend out the remaining amount. So as I gave the example, you start with $100, you have 20% reserve requirement, so you can only lend out 80. But that 80 again comes back to banking system. That out of 80, you can again lend 64, so on and so forth.
So the
when you
money
continue that,
Yeah, money multiplier you're talking about.
correct. That's what I think you joined late, but that is what I explained earlier, that you have money multiplier effect. So that is why you should not touch bank money. The moment you do that, here you don't have that applicable at all. The moment you try to replace it, and the moment you keep interest rate on that, you will start replacing that. That's why you will not find any CBDC major country issuing with interest.
I'm pretty sure that you might have explained it. I was confused about in interest bearing and non-interest bearing you talked about in digital currency. Maybe you explained it.
Yeah, so I will tell you why. You should not have interest element in CBDC because it is akin to cash. You can have some small like 0.25%, 25 basis point just as encouragement for people to use it. But it should not be material enough. Even if you want to keep it, make it negligible. It is like a cashback that you get, right? You are trying to promote it. So that is the better way of doing it.
So when you do the comparative study of governments, in one country I saw that there was interest bearing and the rest of the country does
Correct.
not. What is the motivation for that?
It is a very small country, right? So for them, they wanted to look at, and that's why I said, even interest-bearing component there is very small. It is not comparable to the normal banking rate that you normally get, right? Let's say in India you have 5% savings account, right? You will never have 5% CBDC.
So just to compare cash versus digital currency. So basically, you have a distributed ledger and you have in digital format. Rest, I don't see any difference, is it?
There is. How? So let's understand that, right? If you have traceability in mind, so this becomes a smart currency. Traceability, then you have some other things that you want to achieve, right? Direct benefit transfer. You want to have end-use specific direct benefit transfer. You can have embedded compliance in that, in currency you can't. So embedded compliance means that in India you already have e-rupee voucher, correct? Have you heard about e-rupee voucher? Yeah. NPCI has issued that, right? It is already issued, and it was meant for your vaccination. So earlier what used to happen, even if you do DBT using Aadhaar, even if you do DBT, you never are able to control the end use. People can use that money, 800 rupee for example, and use somewhere else. With this, you are able to control the end use. So CBDC will also have that element where you can control the end use for certain classes. Where DBT is a separate class of CBDC, where you have end use specific CBDC use case. You can't use it for anything else.
Okay, that raises the question of privacy. So
That again we discussed that it is not possible to have all the three elements, right? You have a trilemma that if you want privacy, then you don't have traceability. If you have traceability, then you can't have privacy. And then again, acceptability part. The moment you have acceptability, then you can't have privacy, all those things.
Now I can see the benefit from the central bank perspective, but I don't necessarily see the benefit from the retail perspective.
There is. So let's assume you don't have PII based tracking. PII means that I can track with whom it is actually, but I can have still a tracking on an industry level, correct? And if I do that anonymously, it can help me in policy making for retail client also. If you are getting this even on an offline basis, etc., you don't need to carry currency anymore, right? So that has again that logistical benefits.
So, but there are proxy like wallet around, there are a credit card around.
You can't compare credit card with this. You need to compare currency with this. Credit card is very different. You can't compare credit card with CBDC at all.
Now I'm looking at the end use from the retail perspective. What am I getting out of this?
Let me tell you again, right? Let's think about this. A retail customer, now he has cash, correct? If you carry 100 rupee note, for example, or 200 rupee note in a bulk, you are having that cost of storage as well as risk. Here, the same thing you are able to get it done with same regulators guarantee, which means that your money is directly coming from the regulator, the guarantee is with them only, but you are able to even use that offline, you are able to use it online and in a simple instrument. Number one benefit. Second benefit, if they are incentivizing, for example, that small 25 basis point, if they incentivize, then unlike cash, you are getting something more beyond cash, right? So that is another advantage that you get. And acceptability part, understand this, the moment more and more people are having, just imagine the cost of transaction in cross-border. Government can do the compliance tracking, everything, but cross-border transactions, I can do at a fraction of cost. Another advantage, my cost of compliance can go down drastically if I use this because I don't need to do any compliance if the CBDC can have embedded compliance as a part of that. There are multiple advantages that a user can have based on his or her usage of CBDC.
Can you explain the cross-border transaction benefits?
Cross-border transaction benefit means that if central banks are transferring directly within themselves, right? SWIFT is creating CBDC bridge. It means that they will be able to transfer immediately, almost immediately, unlike the time which it takes right now, and fraction of cost because it will remove the intermediation completely.
For that, both two currencies need to be in same CBDC format, right?
No.
So, for example, Indian rupee
When you say CBDC format, are you talking about CBDC in general? But let's assume, right? One is using Ethereum, one is using, let's say, Corda. Doesn't matter. It can still work. It can be a different framework, but across the globe, the moment we are looking at this, right? CBDCs means that they are trying to create a format which can support embedded compliances, embedded transfer, cross-border use cases only we have seen, right? All the Project Dunbar and everything. That is what they are trying to achieve. Everyone is trying to achieve the same thing.
Thank you.
Any other question, anyone? Yeah.
You store a CBDC with your bank and then earn interest over it?
In hybrid model, you can do that, but in direct model, it will not happen. In a direct model, you will always be able to keep it with regulator only.
You can't park it with a bank and earn interest because then bank can lend some part of it similar to cash.
CBDC you can't even lend. That is what I wanted to differentiate, because the moment you say I can deposit with the bank, no. It will be, even if you're able to deposit, it will be a separate account. Like today you have, let's say, account 1, 2, 3, it will be a separate account where you have certain limitations. You cannot lend out of that account.
But then if it cannot be lent, then what would bank do with that? So
it is just for the sake of, let's say, understanding the transaction flow, etc. Think about same thing, right? Prepaid card also. Why do you think prepaid card or credit card is useful? Because you can understand about the consumer's transaction history, behavior, so on and so forth. Same advantages. Any other question, anyone? Any other questions? Go to that presentation. So, like always, you can just enter your details if you want to have a participation certificate.
Thank you, Vikram.
And those who want, as a part of comment, you can just mention that I want the presentation and the file, Excel file, and I will send it to you. Still, in case you have any questions, feel free to ask. Yeah.
But in my view, I think it's akin to cash, like you said.
It is akin to cash.
Right now, if it is akin to cash, if I park it with the bank, okay, I open another account which holds CBDC, let's say, and it holds CBDC. Now, for bank, the cash and CBDC both are money in simple terms. Okay, they have that money. Why can't they lend it further?
No, that's what I mean, right? So, look, you need to look at the nature of that money, right? The moment it goes into your current account or saving account, that account type itself means that it is meant for interest and going ahead with that. If you deposit that into your saving account, then they can lend out of that.
Ah,
But if you maintain that under CBDC account, they can't. That is what I mean. So
Okay.
you can deposit the same amount and convert that into bank money.
ah,
That is still possible.
correct.
But I'm not talking about that. I'm talking about keeping that under CBDC account only. We are talking about CBDC here, right? So it is a separate account.
So it will be like a parking my money.
Correct.
That's it.
So it is like instead of maintaining account with central bank, you are maintaining with your bank.
Okay. There of course it won't, but then I can convert it into
Correct,
bank
anytime.
money with the
Like
bank.
money, like cash you can deposit, you can
Ah.
deposit. But I'm talking about type of account.
Okay, I
The
got it.
type of account is the major difference, right? Saving account you deposit, you can then lend out of that.
And can you also brief on the development in India currently? What because I have heard few circulars and
Yeah. So not circular, but the concept note that they have published as
Yeah.
such, right? So what in India they are trying to achieve is that, as I mentioned, wholesale based they are trying to create using account, and retail based they are trying to create using token. That is what they have mentioned. Now, what kind of token, etc., those details are not available as of now. But let's assume that they create token based. Then the idea will be the experience layer can be controlled by fintechs as well, because ultimately you can control that final part. And under RBI's sandbox, there will be a cohort which will be on the CBDC as well very soon. That's what I believe. So fifth cohort, in fact, indirectly covers that. If you look at the fifth cohort, RBI's fifth cohort, it indirectly covers this part, right? So even those who are trying to apply can apply for this as well, saying that, okay, I will control that experience part.
There's another question back there.
Hi. I think you kind of answered it, but I'm just repeating the
Sure.
question. Since like UPI, right? I mean, it opened up interfaces, and then there were a lot of innovations in the kind of experience for the end user, because that's what I think end of the day matters when
Correct.
it comes to retail adoption.
Correct.
So do you think there would be interfaces opened by RBI, for example, in India, and then other
Definitely.
where
So that's what I mean when I say embedded compliance, right? RBI will put certain things which are required. Let's say capital account convertibility is not there, so you can't transfer for certain use cases, etc., right? Those things they will embed. But what about other things, right? Sometimes the compliance can be specific to certain use cases. So you can trigger those compliances when those use cases are used for, right?
Sure.
And that is where that interface will help build further layer of compliance.
Yeah. So as long as there is an interesting interface for the retail user,
Correct.
while the core parts are still controlled, hopefully, yeah,
Definitely.
it should open up the innovation aspect.
Correct. So I can create that programmable money which can become much more robust when you look at the retail counterpart, right? In India specifically, you have so many different regulators,
Yeah.
unlike Singapore. So different regulators may want to extend different compliances separately, etc. Those things you can keep on adding as a layer.
Got
And
it.
that becomes a interesting use case.
So for the retail payments part, do you think NPCI in India is going to play an important part in this, or
Yeah,
is
that's what I believe. That's
Okay.
what I believe. They will play a
it.
critical part.
Okay, thanks.
Thanks. And how do you see the competition between CBCD and cryptocurrencies? Are they a threat to each other, or they can live together?
There are certain countries, including India, where the idea itself is that they want to replace that, right? The idea is that you want to replace that. The purpose behind creating CBDC is something you want to replace it. But then there are certain countries which we saw, right? Sweden, Switzerland, which want to coexist with CBDC and crypto. So you are creating wrapped tokens which can work with the crypto environment. So what I believe is that you will have, even if those countries which are starting with independent CBDCs which will not work with crypto, eventually you will have through DeFi, you will have on-rake and off-rake kind of a conversion through this intermediary tokens. And finally, when you look at after 3-4 years, you will have completely tokenized intermediary tokens which can help you convert from this to that. So eventually it will work. It will coexist in a long term, but for short term, some countries will not even look at that, right? Including India. India will not try to support that much to the crypto ecosystem. So that is what I personally believe. And you can see the taxation, etc., which will indirectly tell you that that is what they want. So certain countries, through their policies and procedure, will tell you that I don't want to promote crypto. Certain countries will promote that. So it will depend on that. Globally, it is a mixed view right now.
Thanks. And another question now, specifically for CBCD. There are some cases where countries are trying to create a hub, let's say UAE creating an infrastructure hub that can serve, let's say, all the Middle East. By doing that, several countries can share the infrastructure, blockchain, policies, etc.
Right.
But my question is, how can the sovereignty of each country be guaranteed when the infrastructure is shared, when blockchain is storing transactions for all the countries? How can these countries work together and make sure they keep control on their own country transactions without sharing information that probably they don't want to share?
This is a very good question, and I will request you to open a website you can open called indiastech.global. I will just come there. You can go to this browser. You need to close that presentation part. Yeah, so let's look at this as a simple example, right? So this is the public infrastructure in India, which they have opened up now for global audiences. The strategy that India is using can be an example for this, right? You have, first of all, open source systems, which people can then use. They will share with them. It is open source technology that they are using. So nothing is as such proprietary and behind the scene, right? Third, they have certain conditions to be met. It has to be based on secure architecture, infrastructure. In fact, they share the architecture along with the entire set of rules and everything. Now, here what you are saying, I am not telling you to use my infra directly, but I am telling you use this set of open rules and engine and code base, which is tried and tested. Now, UPI you already know. UPI is already tried and tested. It is working amazingly well. If somebody is trying to replicate UPI, go ahead and India will help it out, whatever is required, right? That is what is meant when I say that it can be a shareable infrastructure. You don't need to ask someone to join your infra, but you can say, copy my infra, copy my architecture, I will help you out. It is an open thing, so people can then use that. With certain condition that you want to ensure that it is a secure, no issues are there. In fact, the moment you share more, you can figure out if there are some inherent issue which you might face in future, but somebody else is facing right now. So that is the benefit that you may get. And for CBDC also, central bank digital currency, you will find this benefit when people are sharing the architecture. And that is where you have MCBDC bridge or we have seen that multiple CBDC, right? That is exactly what is the outcome that they wanted to achieve there. Multiple countries coming together trying to figure out whether it works for them. Different country will face different issues. And that's how you can figure out as a consortium what can work in general.
That's a very good point, and that makes me think on what will be the future. Because right now, different countries are trying different pilots with different architectures. Do you foresee that in the future we may have one or two solutions that can be used worldwide and they will dominate the architecture and solutions? Because right now it's spread in different solutions. Do you foresee like something in the future, one single or two solutions providers that will be dominating all the world?
Correct. You already have certain global networks today, right? Like SWIFT. Then you have Visa network, right? Visa, MasterCard, etc. In fact, those are the people who are trying to create that unified interface for everything. SWIFT has already started. Visa is looking at, you will find Visa guys here as well. They are also trying to figure out how on the Visa network you can do CBDC transfer. Visa already has Visa B2B Connect, which is working on blockchain, DLT, right? So that Visa B2B Connect, they are just trying to look at how CBDC can be ported on that, right? So all those use cases you will find emerging directly. Now what happens is that whenever something new comes, it challenges status quo. Anything new happens, right? Whether it is a new regulation, whether it is new technology, it will challenge the status quo. And that creates new opportunity. It maybe challenges the existing player to start looking at new things, or a new player can replace them, right? And that is what really is the advantage of using this as a new way of doing innovation. Because if you don't do anything, we are still using, let's say, like thousands of years we know about the currency. Now we are talking about programmable currency, we are talking about embedded compliance, etc. That new innovation can only come if you are trying to get something new done. So to answer your question as well, to your question as well, you can still work with currency. It is not like currency is not usable, but it is more about what can you achieve when you look at something new. Beyond currency, there are some limitations in that. You have major cost of operations for a country like India or any bigger countries, right? Printing, managing, counterfeiting, all those things you need to control. And that is when this becomes very useful.
Thank you.
Any other question, anyone? Yeah. Thank you. Yeah, he is good.
Hi. I just want to understand, in terms of your perspective, how would interfaces for cross-border transaction would look like, both on logically and interface level and the technical level. So what do you think ideally,
First of all, for user like you and me, it will be exactly same as what we are experiencing today. It will not be different. But behind the scene, what happens is that currently, whatever architecture you are using, through API, you will be connecting to that only. Understand that. That interface is secondary. That is the experience layer on top of the technology. We discussed about the architecture part, technological architecture. So I will go back to that again. If you can go back to the presentation. Let's look at this one more time, right? So when you look at this, this is the payment channel, right? And this is the gateway part. And this is the network. Now, this UI, UX and API, this is independent to that, right? Which means the interface can be controlled by anyone. So whatever interface you are using today, you can still connect this to that. That doesn't matter. Through APIs, you can still connect to the same interface. You don't need to even have a different interface for that matter. The workflow might change. Interface will remain the same, workflow might change.
So the underlying technology might be different. Only thing you need to know is the API and how you connect to, and
That is a developer's job, right? You as a user or even banking user, as well as the banking teller or somebody who is operational guy, may not even bother about that.
Right, I'm talking on the technical level because...
Yeah, so technical layer, this is the back end now, right? This is how you are now connecting with the system. But overall, when you spoke about interface, etc., that experience will remain the same. Workflow might change.
Okay, thank you.
Any other questions? We have few minutes, so in case you have questions, go ahead.
Okay.
Yeah, great.
Thank you very much, Vikram, for giving us an overview on the CBDC. Thank you. Warm hand of applause. Ladies and gentlemen, our next presentation will be in 20 minutes at 12 o'clock. Thank you.